cool. 627. I'm comfortable taking it either way. Yeah. Okay, so the plan is to just, we want to trade very, very, very uniformly today. We just want to stay within the rules, no freestyling, no getting creative. We're power of 4 all day. Treat this like a case study for the week. And yeah, beautiful, gorgeous. All right, so I'm looking for, you have liquidity here, so I'm looking for a run down to either London's low to take it back up, or a run up to, I don't want London's high. I think that level is just risky because Asia's high is sitting on top of it. And that is my secondary level there, so that's what I want. I would want Asia's high. All right, we have our plan. So we want Asia's high or London's low. London's low for a long, Asia's high for a short. And I can definitely see us pulling back to just London's high, which is lower than Asia's high, and moving back down. I could absolutely see that, but I think that's the higher risk play. So let's stick with, yep, that's the plan. All right, we just want clean trading today. Clean trading. All right, 6:29. Less than a minute left until New York open. Let's go. I'm excited. We are open. We are open. Let's see what we get here. If I had to guess, I would say a move up to the liquidity at the top and then back down, just because we're already moving in a pretty congruent uptrend in the lower time frames. It looks pretty clear. So if you believe in a Judas swing, that's a hell of a goddamn Judas swing. Wow. Powell does do a talk today. Today is the it's the 30, we have expiration on the 30-day Fed fund today. So lots of volatility should be expected today. And even if it doesn't happen, it should be expected. That is absolutely insane. Seeing that right out the gate almost makes me not even want to trade today, because it makes me feel like the market's going to be on some bullshit. I'm going to be risking $400 per account per trade today. Why is it so cold in here? What the hell? I think we got a second, so I'm gonna have to plug this heater in. Make it toasty. Alright, so no matter what happens, just stay patient. Stick with our planned injuries. Oh, that feels so good. Oh, that's amazing. I love it. Alright, we're gonna have to be maybe perhaps a little bit patient. I mean, maybe not that patient because the market's going crazy, but to be a little patient here. Once we hit London's high, this right here, 2287, that's Asia's high. So London's high is 2247, so we just hit it. So we'll probably do like a fake little push down right here, just a small retracement, retraction, however you want to look at that. And then I'm expecting us to run all the way up to this level and somewhere around there is where I want to take a short from. If we make it there. I'm guessing we do though, and I think that's why the market opened with like such momentum, is because we had to make it from that low. We had to get back up to Asia's high so that we could do whatever the hell it is we're gonna do for the rest of the day. But you see how we just shot out the gate, just all super crazy. The market has an agenda, and the market needs to get to where it needs to get to. That's how I look at it. Okay, so we hit London's high. So again, I would expect some kind of move down from here, but I do not believe that that's going to be the real move. Very clean bullish imbalance right there too. And I don't think we're going to come back for this one right now. I think we hit Asia's high, and I think we take care of this imbalance on the way back down. It's just what I think. This is just what's going through my head. Am I biased? Wishful thinking? I drink a full bottle of water before I allow myself to move on to Celsius drinks, which, by the way, are healthier than like Red Bulls, but like, why do I always feel like my heart's gonna explode if I have two? I feel like I should be able to handle two. It's disappointing that I can't. Quota met. I don't want to see that on my desk. I'll deal with that later. Alright, what we gonna do? I got the peach, mango, and green tea, and the strawberry lemonade. Let's definitely do the strawberry lemonade first. Green tea has caffeine as well, but this one is sparkling. Yeah, I like it. Not too goddamn shabby. Not too goddamn shabby. Okay. It just dawned on me, you know, like when I trade, I don't watch TV. I don't have music. I am just here with the market. I must really like trading. Like, that's all the stimulation that I need. It's not like I'm a scalper. It's not like I'm like boom, boom, you know, taking a million trades. Just an observation. So on Friday there was like, okay, so on Friday I got my first real entry. It was like after 12 o'clock, which is like, it's so unusual. So that was agonizing, having to basically sit through the whole morning portion, the AM portion of the New York session with no moves. That's crazy. That just doesn't really happen a lot. Pretty much almost never. And so a little bit after 12 there was an entry, and then after 1 there was another entry. So basically the market just like broke me. Like, I mean, I was kind of like having fun, but it was like negligent fun. But because I had to wait so long, like basically the market just broke me and I was just doing a bunch of silly stuff. So I have that fresh in my mind. And so today, you know, the goal is to stay very... I'm sorry, I'm shivering. I'm a little bit cold, but I'm warming up because I got my heater going underneath my table. But the reason I'm gonna be very, very, very hard on myself, and I'm gonna make a very serious attempt to be extremely meticulous about my entries today, is because of the games that I played with my life on Friday. So I don't want to have any of these issues today. I don't want to have any regrets. I want to, like, when I take a loss, I want the loss to be because I executed my strategy and it just didn't work out. Not because I took something that almost was guaranteed not to work and then I don't, you know what I mean? Like, I don't want to have that kind of day. I'm steering clear from like YouTube comments for like the whole week. I can't have anything in my head except for the plan that I want to execute, evaluating my performance at the end of every single day, moving on with my life to the next day, rinse, wash, repeat. I can't have anything else in my head. Sometimes like the channel goes through like waves where there'll suddenly be like this influx of like new people and like, I don't know, just more attention than the channel normally gets, because it's generally a boring channel. There's not really anything crazy happening here. It's really just trading. But every now and again there's like this influx of, you know, new people that come in, and with every single new kind of, you know, wave that occurs, there's always an asshole. There are typically a few, and I'm kind of over it. I want people to come here not for necessarily for entertainment, but like to understand like it's a trading development channel. People coming here and being like, oh, you're scamming and da da da. Okay, if that's how you feel, cool. I'm scamming, I guess. Yeah, I don't want to deal with that. I don't want to see stuff like that in my comments. I just want to talk to traders who are talking about trading stuff. I don't want to see all the other stuff. Let's share good ideas, right? Let's help each other develop and be better. I'm not an influencer. You can take all that other stuff to the influencers that are selling you stuff, who have zero social proof. You don't even know if they really trade or not. Go there. Go see them. Let me have my boring, calm, serene channel with real traders focused on their development as traders. Alrighty, so we're playing around London's high. What's this exact level? 224775. 224775. So that right there, that's London's high on the day. Here's Asia. We're waiting for Asia. I think Asia is the better, safer play here. I got my power of 4 popping at Asia's high. We're waiting. Oh my God. I'm getting excited. I really am. I hope I'm right too. I hope we don't I hope we don't move down from London's high, because I'm not gonna take an entry there. So if we just start like really rocking from London's high, then I'm gonna miss it, and then I gotta wait like, you know, another 10 years for a move. So I'm really hoping that I'm right and that we push up to Asia's high. What is that? Sure. All right, looks like we're making a push for it. We've been holding this level pretty decently. Oh my God, it's almost showtime. It is almost showtime. My heart rate is increased. I'm literally getting excited. This is crazy. I hope I don't get blown out. But we're not, you know what? We're not gonna trade with fear. We're just gonna trade the plan. That's it. I do not want to see a drop at London. I think we got it though. I think we'll make it there sooner than later. No, moving stuff on the chart. Chill, bruh. Oh no. Okay. We wait. One of the most consistent things that I realize on bad trading days is when I go back and I review my trades and I review market behavior, I just always see that, like, if I would have just waited for the setup, that it was like there. And it's like, even on the days where like the market almost seems like impossible to trade, the setups are like, they're always there, right? So there's this contrast between like what you're seeing, what the market is making you feel, and how you respond to it, versus like objectively like what is really happening, and the levels, the key levels that the market is moving between. I'm telling you, like every day, like any time that I've ever just had a really, really poor trading day, I go back and look, the levels were always there. And even when the market looks crazy, disastrous, disorganized, the entries, they like the actual real entries themselves are just as safe as they are on any normal calm day. So this week, the focus is really, really, really on controlling what I'm feeling on the inside of my brain, right? Like all of those different emotions and all of the different thoughts that are just pinging everywhere. And like, it's not necessary. Like, you just need to stay calm as fuck. And it doesn't matter what the market's doing. You have your plan, you have your strategy, you have your risk management. You just trade. You just trade within that. It doesn't matter what the market does. You take an L, it's okay. You took an L. You traded your strategy that was inappropriate, that had an appropriate probability, right? That was based on you back testing. And whatever your historical performance has been, trading that strategy, you just stick to it. Don't let the market throw you all around. The rules are simple. Trade the strategy, good risk management, and in my case, if it's a really bad day and I take 2 losses, okay. Market doesn't agree with my strategy today. It's not working out. We walk away. We come back the next day, and more than likely that day or the following day, things will turn around. You'll recover your losses, right? Because your risk management, you're trading with an appropriate reward to risk, which will cover your losses, right? So when you win, you're winning. In my case, I would like to be winning 3 times the amount that I'm losing for each loser. And we just let the odds play out just like that. Look looks like London wants to perform. I don't know. I still think we're moving up to Asia sooner than later. So we're just going to wait. So again, the two places that I want to be taking trades from today, Asia's high, London's low. Oh, we moved back into that imbalance. Kind of made like a triple top there. Cool, cool. So London would have been a good entry. All right, we got a 50% pullback into that imbalance right there. So when I'm trading, like, I have some common sense, and you can do this too. You don't have to be crazy, wild, and impulsive and take every entry that you think you could possibly take, right? Be selective. Take the best entry. And in the meantime, when you're watching the market, just consider it like study time, you know, like you're watching the live market. You can paper trade it. You can paper trade certain, setups that you think might be viable, and you can collect data on that. But if today that's not a part of your strategy, you don't have to execute on that. You can just paper trade it. You can mentally paper trade it. You can just observe and look at price action and, just continue to develop a feel for how your instrument moves. I don't like trading a bunch of instruments. I just don't see the point. Like, especially when you have an instrument like Nasdaq that is so volatile. Like, you just, for what, I think I love the idea. There's plenty of people that don't do that. There's plenty of people that will trade multiple instruments, and like, I think that's a great idea for, in my opinion, right? This is just my opinion. I think it's a great idea for someone who is like an experienced trader. You know what your strategy is, right? You have confidence in the market. You're very disciplined. You know exactly what you're looking for. So you can bounce between, different instruments and take your entries as you see them. But if you are not a profitable trader, in my opinion, or if you're like becoming profitable, but you're like in your super early days, in my opinion, I think you're better off focusing on like one, because then you really get to develop your skills without just being jerked around all over the place between multiple instruments. And then when you really, really have your skill set down, then you take it and you can be that trader that's kind of like, but I don't know. I just think like as you're developing in your earlier days, in my opinion, it seems more sensible to have like the least amount of things on your plate. you don't want to be juggling a million things. It's in the beginning, it's like difficult enough to just like really establish your strategy and especially your discipline, you know. And so if you start trading a million different instruments, trading 5 different prop firms, like it just seems like a bad idea to me. To each their own. But I don't know, if you are like a newer trader and you know you don't have your discipline down yet and you're not like super solid on your strategy and you're bouncing around between multiple instruments and you're bouncing around between multiple prop firms, I would say like, bro, trade one prop, pick one, trade one prop, pick one instrument, and just really focus on that until you really build your skills up and your level of discipline to excellence. That would be my opinion. That's just my opinion. Oh my God. This is what I did not want. I didn't want London's level to perform because then I knew I was going to have to wait. Okay, so we're approaching New York's previous day high. Is it the high or the low? Previous day low. And that's definitely a key level as well. But again, I'm trying to decide if I think that's like a risky because I mean, we already took it. We took it like 5 times. It matches all the criteria, but we've taken it so many times, and I'm like, would it make sense? Would it be worth it to? I guess that's just looking at the lower time frame. But if we look at the 15. Yeah, if we look at the 15, we took that level at least 5 times. And in New York, it would make sense. It would make sense to see the market pull back to that level and then bounce back up. Will I take New York? I think I would take New York. I would take New York if we smack that level again. I would take it.
Order filled.
Order filled.
All right, beautiful, beautiful. 60 even. That's gonna be our stop. All right, so we've entered at New York's power of 4 here, and we're gonna give it 2. I'm treating this like a case study, so I want to trade this very, very, very meticulously. I want to follow all of my rules. So I'm gonna, unless we get like a really volatile move up, I'm gonna wait for 2 1-minute candles to close that are no longer touching my entry point before I add a break-even stop. And I want to additionally get my exact levels here so I can see what where I want my exact TP to be. And in the meantime, just for a moment, that swing high makes sense to me. Okay, why am I taking my time like this? All right, entry. Jesus Christ. 20, 1802. Boom. Template 3 to 1. Boom. All right, my entry the same. Entry 20, 1802.5. Yeah, sure. All right, okay. All right, gives me a, for a 3 to 1, gives me a 224025. All right, that is a reward to risk of 3 to 1. And then the same trade over here too. So let me, oh, I got a better entry over here, huh? Y'all, break even stop, y'all. Okay, cool, so I got the break even stop. We're just not gonna, we're not gonna panic. All right, and then I want, all right, so we have 2 candles that have closed. Break even stop. Okay, we have a free trade. work these levels out for my other entry. My entry over here to my right is 217275. Whoa, that's a way better entry. What the hell? Okay, sure. Looks like we're gonna break even on this one, which doesn't really surprise me very much because the New York level was not my top pick. But this other trade is still going. I may not even need to enter these levels because it may hit my stop over here, so I'm just gonna give it a second.
Order filled.
All right, stop hit there. Break even stop as well. So, as of right now, I'm not going to re-enter that one. If we're getting a push down, I would prefer London's low. But you also have to keep in mind, just because my or your trade stopped out doesn't necessarily deem the trade invalid, but I'd have to get all my same criteria met again to re-enter into this one, and I don't have it right now. So we're just gonna let this play out. Alright, so the next level that we're looking for to take an entry at is gonna be I'm looking to take a long. So we're gonna wait for London's low, which is at about 21.1750. Tradovate's got it at 21.1950. Unless this level starts looking better, I don't have all my signals to take this just yet. Yeah, we might be taking another entry here at New York. I'm liking the way New York is looking. Like, it looks like it's trying to hold, but it looks a little risky too. Hold on. And it's interesting too, right? Because when you back test, there's certain things that you don't really know, like what we have on that 11 seconds on that candle. You don't really know if what you're seeing in the back test is going to be like exactly. I'm liking New York. New York looks like it's holding.
Order filled.
Order filled.
63. All right, there's our stop. Tentative limit order right there. And overheal. Alright, there's our stop there. Let me make sure this is correct on this side here. Yes, it is. Alright, let's see if New York holds. So the only thing that I don't love about New York is that we have a level below. We have London's low below, which makes it a little bit risky. And because anytime we have a more distal, if we're taking a long, whenever I see a deeper level that it could pull back to, that I would consider like a key level, to me that makes it more risky because the market is drawn to liquidity, so the market may want to pull back and hit that area. So there's that. And then on top of that, New York has been hit, and it's performed off of this level a multitude of times. So those things make it risky. If we lose this one, we have London's low below, and the probability at that level is a lot higher. So if we take an L on this one, then hopefully we'll come back and take a W on London's low and clean up this loss. So, but I think that it's worth at least taking a shot at. It does meet all the criteria, and so that's it. All right, so I'm gonna set this up. All right, so we have an entry of 2163.25. Okay, cool. Stop is in the right place. And 2223.25. All right, that's a reward to risk of 3-1 is how that's set up. So it's 225. So this stop should be 214225. Okay, and the TP should be 222225. All right, cool. So I got that set up on both my trades here. The stop is 2142, and This stop is 21.43. We wait. Yeah, I don't know. I'm not sure if New York is gonna hold. I don't think it is. Yeah, I feel like we want to reach for Asia or London's low.
Stop filled.
Okay, so my stops were pretty much at the same spot for both of those, so that's an L on both of those. So that's a loss of roughly $400 per account there on this one. Alright, so I will not re-enter New York. I will wait for London's low. Because the nature of like a power of 4 play is that it moves very distinctly, very aggressively typically, like right out the gate. So I've taken 2 attempts, and again, we knew that this was kind of high risk because New York has already been tapped, and we've moved up from that level a multitude of times. So plan is the same. So London low, waiting for that level to get run, and we're gonna look for an entry there. And we are approaching. There's too many lights on. It's driving me crazy. Not New York performing after it knocked me out. Come on now. Okay, we're waiting, we're waiting, we're waiting, we're waiting. I'm not taking New York. Alright, we're gonna stay patient. We're waiting for London's low. Yeah, I just personally think that we've already taken New York too many times, so it's nice though. It's a nice engineering of additional liquidity right there. That's kind of cool. So we engineered some liquidity here, and we know that we have liquidity under here, so it's like double stack now. Makes sense. We run down on this level and then move back up. That's my thought process. Not New York legitimately performing. Okay, okay, okay. Okay. Cool, cool. Still gonna wait. Damn, when you follow all your rules, the day be feeling long, bro. Oh my god. I need this data though. I need it to be clean. I really hope New York is not the move though, because if so, no. Yeah, it kind of was the move. I think we were, I mean, damn, we already moved up over 300 ticks. Look at the market structure, 15-minute. Oh shit, the caffeine's starting to get to me. My eyes are twitching. That's nice. Okay, okay. So that was basically a pullback into London's high. The move back down. Okay. very tiny imbalance there. I like the way that's setting up for a move back down, hopefully. A little displacement with a breakage structure, small fair value gap created, pull back into it. Let's move back down now. Let's hit that London low, baby. It's 10:40 Eastern. Come on. And if you're wondering like why I don't just set alerts and then like come back when the alerts go off, number one, I'm obsessive. There's no way. Like when the market opens, like for New York, I gotta be right here, front and center. There's no way. First of all. Number two, the moves, when they do happen, they happen so quick that if you are not right where you need to be, or you don't have a limit order set, you're not going to catch them. And then it's like, okay, so then why don't you just set a limit order at your levels? Because based on my rules, I have my key levels, but it's not enough for the key level to just get hit. The market also needs to be showing me that like we are additionally like overextended in that area. So if I'm going to take a long, it needs to first hit the key area, and when it hits the key area, we either need to be like extremely oversold, and sometimes that doesn't happen right at the key level. Sometimes it'll push deeper, right? So you gotta be watching the market, and you have to assess for that. We got a triple top on that boy. Let's go. Take London. Let's go. So yeah, so I don't do that. I don't set alerts and go off and live life. When New York opens, I'm here for it. I'm here for all of it. Damn, that's a gorgeous short right there. I'm not taking it though. I'm not taking it because I'm trading one strategy today, and at the end of the day, I want to know that I only traded one strategy, and I want all my results to come from this one strategy. This is like a case study, okay? But this does look, I mean, it looked good before this, but like when it pulled back into that, it looked good when it pulled back into that imbalance. But yeah, for like a scalper or something, somebody who just likes to take these super quick entries, get in and get out, I would say that like I would have taken an entry on. I would have done it like this. Fib retracement. Thing is like backwards on here. Okay, 1, 2, 3. There's our 3 candles. They're imbalanced in the middle. Okay. So I like pullbacks that go 62% to 78%. So this would have been really nice right there. That would have been perfect. Like basically anywhere just above VWAP, because we would have been over the 62% level. Yeah, that would have been gorgeous. That would have been your entry. And then like if I was a scalper, I would take it right at this low, like this candle right here. I'd be out right there, and potentially with a runner, because I believe that we're going down to London's low. Anyway, my 2 cents. Like I'd bet in Oregon. I would bet in Oregon that we're gonna run this level right here. I'd bet in Oregon, okay? In Oregon. And my stop, 2 points above right here. 2 points above this candle's high. But that's if I was like a scalper. Oregon. We continue to wait. We continue to wait. Let's see, my other fib has, my trading view fib has all the levels, so I'm just kind of curious as to how much we actually did pull back into that. We came just shy of 78%, just shy. It's a really good pullback. That was beautiful. Oregon. This is an example of how you can make good use of your time if you're like me and you just sit at the computer the whole time while you're trading. Run some paper trades, see if you would have been right or wrong. I'm not guessing whether or not I'd be right or wrong. Oregon, it's running that low, promise you. Anyway, but yeah, you know, make good use of your time, paper trade, document it, collect the data, etc., etc. Boom. Give me my organ. Give me my organ back. Get it off the table. It's anyway. And you can be journaling while you're paper trading and waiting for setups and stuff like that. I need to go take a tinkle, and I'm just like, if the market just plummets instantly while I'm gone and it hits my level, okay, I'm gonna put a crossing. Oh wait, I'm not gonna hear that, am I? So it's pointless. I'm gonna presume that I have just, I have time. I think I got time. I don't know why the market's playing these games. We got a little ways. I have time. I'm pretty sure. I think I got time. Mind your business. We wait. I hate seeing empty cans on my desk, but I can't throw my Celsius because it doesn't have a top. That would just be barbaric. Get up and walk to the trash can, you say? Fuck no. Alright, it's taking a long time. What? Why? What do you want? Mm-hmm. Okay, great. Thank you. I don't know why that message is required. Yeah, go ahead and do that and then pay me. Thank you. Appreciate it. Yeah, run it up. Let's go. What am I missing? New York is just fighting, just holding. Let it go. Is Jerome is when is he? Jerome's talking today. Close. My God, buddy. Today is the 30th. Oh, he's talking at 1:55. I don't know why I had 11 something in my head. Never mind. We have plenty of time before then. You know what was kind of disappointing is like just a little bit. All right, I made my decision, but it's just a little disappointing that I took New York twice, broke even the first time, lost the second time, and then the third one that met all of my criteria that I did not take, that was the one that won. Because I lost faith in it. So I said, no, let's just wait for the next level. It's just kind of annoying. Like, it wouldn't be that bad if we would run down to this level, this London low, grab this real quick so we can move on with life. It wouldn't be that bad if we could do that. But the fact that, oh my God, just continue to play these games. Like, come on. This is the test, though. This is the test, right? Like, can you keep your shit together and only trade your plan? Everything going on inside of you is just that. It's what's going on inside. It has nothing to do with what's actually happening with the market. It has nothing to do with key levels. It has nothing to do with shit. It's just what's happening inside of you. Ignore it. Ignore it. Especially if you're a woman, ignore your feelings. They're invalid. Just kidding. Just kidding. But seriously, ignore it. Just wait for our levels to get hit. We wait for our strategy. We wait for our entries. Also, I'll point another thing out too. When I'm in my right mind and not doing crazy stuff in the market, I don't, like, if I think, like, okay, let's say for example, like right now, right? I'm waiting for the market to pull down to this level here to take an entry back up, right? But I don't believe that it's a good idea to go, oh, okay, well, since I'm waiting for an entry here, I'll take shorts to go down here to this level, right? Because that would be a good win too. If you have a reason to take the short, then it makes sense for you to use this as a target. This is just my opinion, but it doesn't make sense for you to get into a short just because you expect the market to, or you're waiting for the market to hit this level. It, like, if you're going to take any trade, it needs to, like the viability of it needs to be based on like the merit of that entry alone. It can't be because you think the market, or you're convinced the market is going down to a certain place or going up to a certain place, that you're going to take a trade going up to it. No, it, like, each trade has to meet its own criteria, and then if you have a reason to target a certain level, you do that. But you don't, like, you, that's the reason you would take the trade, is because it meets its own criteria, not like the other way around. That can get you into trouble, because if I'm wrong, right, if the market does not come down to this level and I'm in a short just because I'm waiting for that level to get hit, like, it's just silly. Those losses can add up quite a bit. So if you just stick with your strategy, trade the strategy, then you're trading the odds and the risk based on the actual strategy that you back tested. And so if you know when you back tested, you got 80% win rate, 75% win rate, when you lose, you can expect those losses to get cleaned up. But if you start doing random stuff, then your numbers change, right? So whatever you back test, whatever your actual strategy is, like, you got to stick to that. It's a part of the risk management plan, and you are a risk manager. And if you do, I don't know, like, if you do crazy stuff like with your own capital, then in your brain, like, imagine it's someone else's money and you don't want to mess it up. Like, some people, that's a better premise for them to trade under, because some people are like, oh, well, if it's just me, like, I'll just, because, you know, whatever. But, you know, if somebody else's, you know, money is on the line, or whatever, then I'm not gonna, yeah, I don't know. If you need to tell yourself that, then tell yourself that, right? It's somebody else's capital, you don't want to mess it up. I don't know, whatever you need to tell yourself. No lie, if I would have just taken that goddamn New York entry one more time, we would be done. But I didn't, we're not. Here we are. Here we are. Damn, New York's previous day low is just holding. Wow. It's interesting to see this. I was watching Asia last night, and oh my god, New York's level killed it in Asia. Asia opened, plummeted right into the previous day low for New York, and just blasted off. I was like, holy moly. I think we got 2 moves out of that, if I remember correctly. 2 3-to-1s, like, not confusing at all. Just literally just hit it. All criteria was met, and it was just boom. I was like, damn, I didn't even know Asia could move like that. Apparently. Good lord. Nasdaq, I'm sleepy. Oh, God. That is a really big bearish order block. My God. How am I sleepy on Celsius? What's going on? What are we seeing? What's happening? Nothing? Yeah, nothing. This is another thing too, is like, of course it's like, it's gonna be the day where you're trying to be the most disciplined, where the market's just like, I'm gonna take my time, you know, like, and then you break, do some dumb stuff, right? And then you go into the next day, or you move forward thinking, you know, well, that doesn't work anyway. No, like most days it actually does. Most days it does. Most days you get a power of 4 a lot sooner. And we saw one play out. I didn't take it because I didn't trust it. And that's on me. I have to live with that. You know what I mean? So here we are. 11 o'clock New York. We're still in the market. Fuck. Sitting on a loss, might I add you. In the market at 11 o'clock, sitting on a loss. Bro, let me find out New York was really the no, come on. There's no way. There's no way. No way. I'm gonna pull it back into it. The short is starting to look real fucking good right now. Just keep it together. Just keep it together. So I can't trade fucking live on YouTube because I gotta be able to fucking edit this shit out sometimes. It should be ridiculous. Even though honestly that's not gonna get edited out. You're just gonna have to suffer through it if you're watching this video. Imagine being an influencer, like an actual influencer with a rep to uphold. Not being able to be your true self. Fuck that noise. Thank you kindly. Please do something productive before you message me back. Like, my God, go out there and get some results and then message me back. Like 800 messages telling me that, like, this is what you're about to do. Like, I get it. Do it, please. Thank you. Appreciate you. All right, let's see how my my Elon coin is performing. Oh my God. So I have, how much of this do I have? Where are my assets? Why is it this difficult to see what I'm holding? What? Uh-huh. Anyway, I have like 11 million Elon coins, and it's to, you know, I was supposed to be really rich by now, but I'm not, so. Yeah, but we're up on the month, you know? The market wants me to take New York again. They want me to give New York another shot. Oh, look at that. It's not looking bad. It's proper, mate. It's quite proper. I'm feeling impulsive. Hold on. Sit here and figure out what's going on. I don't know. It would need. I think it would need to look better than that. But then on the on the something about it looks a little off. I don't love it. I don't love it. Yeah, I don't love it. Something about it doesn't, it just doesn't look as solid as I would love for it to. It looks good, like in the 1 minute, but I don't like to, lean into the 1 minute too heavy for these kinds of entries. It needs to be based on the levels from the higher time frame, and then I just use the 1 minute for finding my overbought and oversold areas. Yeah, something about it I'm just not into. Wowzers. So again, if you're just kind of skipping through the video, I'm running a case study on the power of 4 this week. So at least today, for sure, I'm not taking any entries except those. Obviously, there's been other entry opportunities, but I'm trying to focus on this strategy this week. And I want my data collection this week to be about this strategy specifically. And I'm being a bit selective. We had 3 entry opportunities for New York's level, previous day low, and then we ran London's high, and we had an opportunity there, but I felt like that was a higher risk than the Asia high, which was above it. So I chose not to take that one. So we've had 5 opportunities, 1 break even, 1 loser. The 3rd New York opportunity would have been a winner, but I didn't take it. And the London high opportunity would have been, I think that would have, hold on, let me look at it. We have the level here. So London's high is right there. There's it right there. I really put this side of that. So our entry would have been about right there. So the first entry would have been is that before 9? It is, yeah, it's after 9:30. So the first entry would have been a break even. And there was an opportunity for 2 other entries. And either of those would have yielded a winner. But I'm being very selective today, so I probably would have skipped the 2nd and 3rd just because I'm just looking for like really clean today, really clean. But anyway, that's so it's given a good number of opportunities. So the expectation would be that if if I continue to be patient, we'll get a slew of other opportunities as well on the day to enter with the same entry criteria. So we got like we pretty much have like a range going on here. I'm gonna mark out the range on the 15-minute. I like to just throw a big line across my screen at 50% of the range, and you know, generally speaking, just try to use it as a part of the guidance system and make sure my longs are taken below the 50% range and my shorts are taken above the 50% range. Yeah, so New York was it today, so I kind of guess I messed up when I didn't take that third chance. It's holding very well. And we're approaching 11:30 Eastern time, so if we don't start to see the market get pretty active and start moving a bit faster to try to hit some sort of key level before like 11:45 Eastern time, then obviously it's going to happen after lunch and probably right about at 12. And it's usually when I see the market moving slow during the AM session, like usually at about 12, that's when things will kick up. And normally I don't like to trade between New York 12 o'clock and like 1:10, but if the market's been kind of slow up until that point and then I get an entry opportunity that meets all the criteria, then I'll take it. But it's like it's rare for me to be in the market after 12. I would say most days I already have my my trades done by like honestly like 30 minutes to an hour from open, and I'm like done. So this is unusual, but I am trying to be a little bit more careful and meticulous today, and I just really want to make sure that the data I'm collecting is on point. So you know. Hopefully I'll be awake by the time we hit a key level. Goddamn. How long have I been sitting? Oh my god, I made a blood clot, bro. Like what? Like Naz, we gotta pick this up. I need one of those ergonomical tables that rise and fall. Yeah, I literally almost tripped on a cord. Okay. Okay. Alright, that's enough of that. That just does not feel fun right now. Oh, God, Naz, let's fucking go. I'll tell you what I am learning though, like, that if you don't trade the internal structure trends in between these key areas, some days you might be waiting a little bit. If you're gonna be like overly selective, which is probably not the best thing to do. You probably should just take every single move that meets criteria. No, just kidding. It's not a bad thing to be selective. I'm just salty that I didn't take the last New York opportunity. I'm salty. Oh my God, I can't believe the way New York performed. God damn, the New York level performed. So upset. Fuck. Absolutely insane. Absolutely insane the way New York has killed it. Oh my God. I'm gonna, you know what? I'm gonna get really active after lunch. Just kidding. I will not be in the market this long tomorrow. There's no way. I will not. Somehow I'm still awake. Still awake. All right, we're approaching London's high again, but we already ran it. But let's say 224775, 224775. It falls inside of an imbalance. Could be a nice entry, or it could be a secondary loss on the day. So the question is, would I take it? Would I take it? It's above the 50% mark on the range. And not only is there a 1 minute imbalance that's looking pretty significant, but there's also a 15-minute imbalance. And if I run a fib on that thing, we looking at, oh, look at that. No, that's even greater than a 78% pullback. Which means that, like, we might not even hit that level, and we might just, oh, we're gonna dump from here, I think. Am I speaking accuracy, or am I just tired at this point? Hold on. That looks good. Back into the imbalance. Already ran the liquidity, don't really need a reason to hit that spot anymore. That would leave me with a, where's it at? I should probably just paper trade it and just chill out. It looks good though. And there's just so much confluence on it. And the time is right too. It's 11:30. It's 11:33. So 11:30 is we almost always get really good moves at 11:30. And it pulled back exactly to 78%. So this move is probably going to be gorgeous. It's probably a goner, which is great because now we can look for it to run that low, which would go through New York's fucking level finally. Excuse my language, children back out of the lobby. And $21.27. That's at 20. Yeah, that's it right there. That would take us to not gonna lie, I should have shorted that, but it would take us to London's low, and that would probably be just before or after 12, and then we can finally go up from the level that I've been waiting for. That's my prediction. Alright, you understand the prediction? Let me show you. We have time. 15-minute time frame. Let's open this puppy up. Okay, so fib retracement. Alright, so you see the 3 candles here which create the imbalance, right? Or the fair value gap, okay? So boom. So if we run this, right? Okay, boom. Drag it from the low of this candle to the high of this candle. On Tradovate, they flip the fib. It's annoying. So basically, we have this candle, this candle, this candle. Let me just. Where's the shapes? Rectangles. Okay, so the actual fair value gap itself is from here. It's like that. So it's from the wick, the low wick of this first candle, and to the top of this candle here. Okay, so this space right here represents the fair value gap. It does not have to pull back into the fair value gap and sit. It's you know, you got to kind of use it as like a reference point, because if let's say if you were trading like higher time frames, you would put your stop above the first candle that creates the structure, that starts the backtrack. I need a nap. There's 3 candles that create the fair value gap. You would put your stop above the top candle that starts the formation of it, at least 2 points. This is what I would do. I'm not trying to give advice. This is what I would do. Okay. And then personally, I would be looking for a 78. Well, I'd be looking for a pullback between the 62% level and the 78% level. That, to me, that's more significant than the actual area of the fair value gap that's created. Okay, boom. So that's what I would be looking for. And then I'd say, cool, anything that hits in here, we'd be looking for, like, you know, additional confluence to take that up, or to take that down in this case. I'm sorry. All right, so there's that. And then let me just get rid of, is that distracting? Can I leave that there? No, let's move it. Okay, so then once you get your entry, you would just take it down to the swing right here. Now we're looking at the 15-minute time frame. So what it does in between time could be tricky. You could, you know, but the 15-minute is kind of straightforward a lot of times too. But anyway, so that's kind of how you would be looking for that. Okay, so let me take this right here. So basically, once we pull back to that level, we're going to start looking for confluence in the lower time frame. Let me put the fib back on, actually, because this is going to make more sense. Okay, I gotta get rid of the goddamn fib because I can't. Hold on. I told you it's my nap time. All right, top of the candle. Boom. Okay. Now we have that. So we have everything mapped out in the 15-minute time frame, and we know we're looking for a pullback between the 62% and, you know, about 78% level. We don't know exactly where that, because this fib is not as detailed as we would like for it to be. But now drop down to the 1 minute, okay? Okay. So now that we're looking at the 1 minute, this is what we see. So we're looking for an entry above this point, and we also have confluence here. We actually didn't even pull back into, well, if we look at the gap, no, we still didn't. We have to kind of use the bodies for that. So we didn't even pull back that deep, but we would be looking for entries here, and then above this level here. And then when you look at the 1 minute on the stock, the stochastic, this level right here, once we get to, which candle starts it in the 1 minute? 1, 2. Okay, so once we get to about this candle right here, we're overbought. So at any point right here would be a good time to take an entry in the 1 minute time frame for a short, and you could short it all the way down to that swing low right here that we had marked in the 15-minute. So yeah, and so if you look at this too, like based on my rules, if I'm in right here at this candle, let's just say somewhere between here and here, right, for the low and the high of the body of this candle, and the trade's playing out, and I'm looking for 2 candles that close below my entry point that are not touching my entry point. By the time this candle closes, I'd have a break-even stop. Okay, so we'd have a free trade. And then we know that in the 15-minute time frame that we've already pulled back significantly, right? So once we break down below this fair value gap right here, you can probably move your stop to above right here, above, you know, this candle here, the small little tiny pullback, or you could put it above the fair value gap that we mapped out from the 15. Okay, pause. Hold on. We got some shit going on. This New York level is going crazy. Do I want to take this? How many times can New York perform? I hesitated the last time. Does it meet criteria? Yeah, let's go.
Order filled.
74, we go 64, 54. Hold on.
Order filled.
Yeah. All right, 74, 64, 54, 50, 54, 50. Stop. Remember, it's the 15-minute, so it can do it. Overall, even if we believe it's going to run this level, it doesn't mean it's going to run this level right now, okay? So we're going to go ahead with our power of 4 right there. And I'm going to throw a break. Do I want to throw the break even on early? I think so. And the reason I'm going to do that is because how close it is to 12 o'clock. And also because we know that the potentiality for the market running down and sweeping that low is high. So we have a reason to apply it a little bit early. I just think that's smart. I got a break-even stop placed on both trades here. There's the TP. Okay, let me set this up over here. So we have a free trade. New York, don't you let me down. Don't you've been showing out all day. Don't do it now. All right. Entry 217470. What is 217475? And let's just say I did take that short, right? When we hit the level of power of 4, 4, 8, okay. When we hit the level, the power of 4, that's when I'm probably protecting tightly because I know what the odds are. Or either I might just get out of the trade right there. Because again, overall, long term, in terms of like the higher time frame, we can believe that it's gonna run that level, but it doesn't mean it's going to do it right now. That's the tricky thing about the higher time frames, right? Internal structure can stay within that premise and do a whole bunch of stuff, and literally both things can play out and be correct. What am I doing? Entry 217475. Yes. 3 to 1. That puts my level at 223475. 223. I'm almost like right there. Yeah. 223475. And where's that one at? 22.3, yeah. And what else are we doing here? I need a nap. Okay, and so what I want to look and see is that is probably exactly where I would want to be, because if we stay within the premise of the 15-minute time frame, then we wouldn't really, I wouldn't see this level getting run, at least not too much, right? Because we pulled back 78%, right? So just keeping that in mind. Now we have an imbalance here. We're approaching 12. Now, honestly, this could be a good spot to just take like to protect or take profit simply because we're sitting on an L. And we could just say, okay, cool, we cleaned up for the day, and now we've undid, you know, the damage. We've undone the, god damn, it's time to go to bed. All right, look, I'm not talking to y'all anymore. I'm just trading. Just watch the trade. This is the last one for the day anyway. And I'm looking at 4, 8. All right, so we're set up for a reward to risk of 3 to 1, which doesn't invalidate our 15-minute time frame idea. And we pulled back to VWAP and moved up. I think that's a decent spot for us to lock in some profit and do so on both trades. Where's my break even? Move that over. All right, cool. I tell you what, Nasdaq, you better smash my TP. I've been waiting. I've been waiting. Play no games, take no prisoners. Let's go. What time is it? 11:47. We wait, we wait. I'm very sleepy. Very sleepy. Starting to feel like a little baby. I need my boo. I'm starting to feel, I'm lonely. I need to talk to my boo. Hurry up, Nasdaq, so I can call my boo. Mind your business. It's my business if I'm a cupcaker. I know I could drag the stop, it's just honestly I don't see a good spot to drag it to. And I ain't scared. You know what I'm saying? Yeah. I wish oh, this could be a good spot too. It was an imbalance and it kind of like pulled back into it, but I mean, who's to say it doesn't pull back into it deeper? I don't know. We'd have to. I want to get closer before I do that. I think. I don't know. Do I think that, or am I just tired, or what? What is the deal? So if we get two candles that close red and we move back up, then I would put the stop underneath that. And like, this is the thing, right? Like, newer traders be like freaking out, you know? They're like, oh my God, you're in profit, drag your stop, get out of the trap. Like legitimately, like this is the thing, you know? However, listen, when you understand risk management, right, and you've back tested and you know what the typical behavior is and yada, 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 and how things are going to play out over time. I'm trading Monday through Friday in the market. I have to be willing to let my trades play out. Otherwise, how am I ever going to get 3-to-1s, guys? How? Right? I'll be getting 1-to-1s for the rest of my life. Forever. Okay? And it's okay. It's okay. Sometimes they won't work out. Like, this trade could just plummet and hit my stop, and then I'd be out at about a 1-to-1. And then everybody would be like, you're stupid. Okay. And then that's how it would go. But that's like, if you want the 3-to-1, you gotta hold. You understand? You have to hold. You gotta be willing to put it on the line. You gotta be willing to sacrifice all that potential profit all the way down. You have to. It just is what it is. It just is what it is. If you want to get 3-to-1s, you gotta be willing to hold through some bullshit, and you have to understand it ain't gonna work out 100% of the time. And you have to give the trade room. Why am I leaving my stop right there? It's below VWAP, okay? It's basically, it's really the only place that even suggests that like that's where I could put it that wouldn't interrupt a potential pullback. We have an imbalance right here. The market not pull, like the market's going to pull back into the imbalance, right? It did it just a tiny bit here, but usually it will pull back at least 62%, but if, you know, before it continues, and that's if it does it all. I'm just saying you got to give it room. All right. So just, it's whatever. And it hasn't hit 12 New York yet, so we'll give it a chance. You know what I mean? Because if we were like right just before 12, it probably would have just locked in. But we'll give it a minute. We'll give it an opportunity to pull deeper into this imbalance and then move back up. And let's see. I'm getting excited because I know that like either way I'm almost done working here, so. And that is very exciting for me. And so we just got a 50% pullback into that imbalance. 50% is really all you need to look for, but I usually expect a deeper pullback. So I wouldn't be surprised to see it pull back to the 62%. But the like time matters too. So like I always think of the market kind of like running on like time programs, and like, so for me, in my mind, the market is going to want to complete this move before or like at about 12, and then we'll see like something different play out. So I think like whatever is going to happen, I do think it's going to happen fairly quickly. Like I think it'll, like we'll probably know if my stop's going to get hit or if my TP, like my stop will get hit or my TP will get hit probably within the next 5 minutes. So I'm looking for the 62% pullback. We got like just above it. It doesn't have to touch it, but like that's just what I typically look for. But we got a nice little wick on that. It might be done with it. We might just be moving up from here. But still, we need to wait and just give it a minute before moving the stop at all. Moving with urgency. It keeps missing that 62%. If it really wants it, it's gonna run through it super hard, which I don't want to see. Did it hit it? I think we just barely tapped it. Like just barely. Let's see if we're off. It's 1 minute to 12. God damn. We're getting risky now. This is risky. Oh, it keeps coming back for it. Come on. Okay. All right. We definitely just ran through it just now. So that was at least a run on the 62% level. Let's see if we move up from here. I took that one quick. It keeps coming back though. I'm always just dragging my stop and just getting in the middle of the trade. So right now I'm just like super fascinated to see like how this plays out. Is it? Okay, it's 12 now. Not a big fan of 12, Brody. I want to let it run that high before I move my stop, but it is 12, so if I move my stop now, I can forgive myself. So I'll put it right here now, just to lock in a little bit more. I'm gonna do that on both trades on both sides here. even though it really, really should not be moved until that high gets run. And I'm referring to this one right here. But because it's 12, we're gonna allow it. I hope I don't come to regret that, because I definitely moved that prematurely. Okay, I broke a rule. I broke a rule. No, I didn't. No, I didn't. No, I didn't. It's 12 o'clock. I have good reason to do that. And we pulled back to the 62% level. So if we come back again before running that high, then we're probably just ready to move back down. So like, actually, that's okay. I'm cool with that. The time does matter. I do think whatever happens, though, I think it's going to happen very quickly. Like, please, God, because, like, I want to eat, and I wanted to run through my TP at the top, obviously, but, like, just eating would be amazing. Eating, nap time, little nappy nap. I feel like the market's late. It's late. Like, I feel like, you know what I mean? Like, it's 12, so I'm expecting the opposite move to play out now and to stay within the premise of that 15-minute premise. And I don't like that the market is late, but 12 o'clock gets a little so maybe it's okay. But because we're late, it's making me think that this trade might not make it, because I feel like we're late by like 4 minutes now. So like the market needs to kind of get going to the downside. So it's kind of like, I don't know. But we're going to hold premise. We're going to hold premise. I don't really like, honestly, like even if we run the most recent swing high there, I don't really have anywhere that makes sense to honestly move my stop to. Like I could put it underneath this candle, sure, but it's not really the real place it should get moved to. It's really where my stop is at right now is really where it should remain for the rest of this trade. Oh, God. It's lunchtime. Let's go. Alright, this is definitely where I like to drag my stop. You know what I can't stand? I can't stand.
Order filled.
I can't stand trades that get like within a hair of your TP and then just break down. Like, yeah, are you serious? Anyway, all right, cool. So we did that. All right, so the outcome of the day is we sustained a loss and we made it all back plus 785 per account, and this mother chucka is still going. Beautiful though. We got our 3-to-1. I'm in love with the way that I managed it. That's one of the best jobs that I've done managing a trade in quite some time. Okay, we didn't let the P come out of us. We held. Alright, cool. So we got we're good. And I think we're gonna go down from here because we're in that 15-minute imbalance, and we have so many reasons to. Well, we could go up too because Asia's high hasn't been run, so that's always a possibility too. But whatever, I don't care. I'm done trading. I'm done analyzing. It's been a good day. Thank you for joining. And hopefully for like new traders, you got to see what it's like sitting in the market from New York open to lunchtime New York, so the whole New York AM session. And you also got to see what it was like to just stay faithful to your strategy and let the proper risk management and risk reward inside of each trade take care of a loser. Okay, so you got to see both. You got to see a break even, you got to see a loser, and you got to see it recovered. Anyway, I hope that this trading day has provided you guys some value. I know this was a really long one, but I think it's great because it's almost like you kind of were able to like simulate trade in a sense through me, for people who come to this channel looking for that kind of thing, not just looking for like the entertainment factors. Oh, before I log off, I have to do this, right? Okay, so look, we can see that today, look at the bottom. Hopefully you can see the date and time on there. It is September 30th, okay? And 9:10 Mountain Standard, 12:10 Eastern Time. I'm Mountain Standard Time. And just because, like, I don't know, man, people don't believe that trades are real, and I don't want someone who comes to the channel to learn to lose faith in thinking that like this is a replay or something like that. So I'm just gonna, I think you can see this. Let me see. Let me pull this up. All right, we have to pull it, y'all. Okay, so you are able to see, I think, in the camera, hopefully, date and time. Okay, real trade taken live. This is not a playback. The screen just went blank. If it ain't there and you don't believe it, I can't help you anyway. All right, until next time, guys. I'll see you guys in trade review later.